Hello traders, today is the 4th of May. My name is Hornsey, market and YouTrading, and today I'll be doing a midweek roundup. Okay, I'm going to start on the economic calendar. We see that we had the first of the central bankers speaking today in the Asia Pac session. RBNZ Governor all spoke. We also had Australian retail sales. So the Antipodeans were in focus, whereas the Japanese and Chinese economies were actually on bank holiday. We go to the YouTrading.com for its heat map. We can see here that the Australian dollar and New Zealand dollar are really strong currently relative to all the other currencies. The Swiss franc is currently the weakest. The Japanese yen is mixed, but relatively strong against the dollar and the pound. So commodity pairs are doing well, slightly risk on day to day with this Swiss franc here sort of weakening. If we're looking to the Forex calendar, we can see we're about to have ADP non-farm employment change come out. So there'll be a change in the Forex markets, I'm sure, in a few minutes. Looking through previously during the London session, we had European services PMIs, we had German and final French came in as expected. Previous to that, Italian and Spanish services PMI came in better than expected. And we also had a better unemployment change for Spain. So they've got minus 86,000 less people unemployed. But retail sales were kind of like the focus really at the start of London session, coming in better than expected, but under the 1.8% for Australia. All right, now everything moves towards the US session. ADP, like I said, is going to come in a couple of minutes' time. That will hopefully give us an idea of whether or not we can expect to see the end of the week NFP also come in either better or worse than expected. But then everything is hinged on the FOMC statement, their funds rate, and then when we get the press conference at 7:30, where journalists and analysts will kind of try and unpick the statement, try and work out what it all means and what the forward guidance really is. So ADP number came out 247,000 versus the expected 395. So that's worse than expected. And you can see it's a lot worse than the previous reading. So for NFP later on this week, we're probably going to get a lower number than expected. If I just go to the economic calendar, scroll to Friday, you can see here that we're looking for these numbers here. So the expected number for NFP is going to be 390, so less than previous. So it looks like that's going to come in as expected, like under previous. The Fed are kind of quite happy at the moment with the amount of employment, the unemployment rates and such like. They are more worried about inflation. So PCE, CPI, things like that are more important to them at the moment. And that's what they're focusing their rate hikes on. All right, go to the active trader platform, go onto this tab, start to look at the sentiment indicator. 86% of traders are trying to short the Australian dollar versus the yen. 73% are trying to short the Australian dollar versus the New Zealand dollar. But when it gets to the Australian dollar versus the US dollar, 65% want to go long, even though the Fed are likely to be more hawkish than the RBA. So at the moment, Australian dollar versus US dollar is trading within yesterday's range. We're going to go to the US dollar index now to see what that ADP number did. You can see that currently US dollar index is currently within a tightening range. So we've actually got a bit of a sort of triangle forming, symmetrical triangle. So if you've got 3 highs and then we've got potentially 3 lows forming today if we get a push down in this US dollar based on that ADP number. But then it'll be what happens next. Does market sort of push on higher, breaking out of this triangle, or do they break lower? And for that, you need to start looking at the high and low of yesterday to see if you're going to get an entry in. So if we break out and we take out the high from yesterday, maybe look to then take the liquidity above this particular high. If we break out lower than yesterday's low, maybe look to take out the liquidity below here. And obviously, if we do that, then we've got this big void between 102.8 all the way down to 101.5. Going into the actual indices from the US, we've obviously had worries about a hard landing if the Fed obviously raise rates and then also rapidly reduce their balance sheets. The markets are kind of worried that we're going to get a recession in the near future. If we look to what price action's actually been doing, we took out the liquidity low here. So we had a big swing low here before we took out market structure here. So on the 4th of March, 3rd of March, we had this swing high print. And then on the 18th of March, we actually reversed this downtrend by taking out the market structure here, got above the sort of swing high from the 2nd of February, just sort of looked above it, made a double top, pretty much equal highs, and then came back down. So now we've taken out what was demand down here. So if I just put a box around, these were the last of the sellers, and then the demand really came in on that. So if I just make that gray now, you can see that we've actually absorbed all of those buyers, and we're looking to see if we can continue with this downtrend. Now, price action is below the 200-period moving average in yellow, and at the moment we're just waiting to see if we can close back below the 9-period moving average, and then to take out some lows. And then if we look to the left, we've got a swing low over here from the 5th of March 2021, so over a year ago, possibly the 12,000 mark as a potential target to the downside. And if I put on a fib trend extension tool, if I just go from the highest high to the first low to the pullback, that takes us down to the 3.618. Yeah, so 12,020 is kind of like the target to the downside if you're using fib extensions, and if you're trying to follow with the trend. We can't really get long or bullish really until we get back above this swing high, above 15,250, and in which case we'd be looking for some sort of breakout, retest, continuation. So breakout, retest, continuation to the upside. Or for that sort of pattern to actually happen lower down, and then maybe get a break, somewhere in between the trading range here. But yeah, at the moment, trend is to the downside. We're making lower lows, looking to make lower highs, looking to push into the fib extensions, possibly sweep the swing low from 4th of March into the 12,000 sort of level, maybe even like travel all the way down to the biggest range extension you can see here, and towards the 11,000, and maybe this sort of what was a relatively big balance area between 12,500 and 10,600. So that's the USA tech, or the NASDAQ. Go to the benchmark index, USA 500, S&P 500. You can see we swept the lows again here. So lots of traders have been looking for a breakout, looking for this trend to continuation to the downside. Obviously we've come back in, had a look, but now we are seeing resistance at the lows of this candle. So 28th of April, sort of second to last day of trading in April, we saw that low act as resistance. 9-period moving average is acting as resistance. If we were to get back above the high of the 28th of April, that would be a good positive sign. And then we can start to look for that breakout, retest, continuation to the upside, assuming we can get through the 200-period moving average and also the supply that would come from this particular candle here. So these buyers here, they got trapped. We saw a big push down. We'd want to see if they want to defend that level. These shorts want to defend that level, or whether these buyers want to flip, or if we take out the liquidity here on momentum and then go up and start making higher highs and higher lows. So this is the sort of area of interest around the 4,500, assuming that we do get above the 28th of April high. If we don't get above the 28th of April high, we're looking down, we're looking to the sort of left, we're looking for sort of volume gaps and things like that, and balance areas. So we've got this particular gap here where there wasn't a lot of trading. If we sort of scoot that to the right hand side, you can see 4,000 is the big figure. So possibly a test of 4,000, maybe a sweep of the swing low from 24th of March 2021. So they're the sort of scenarios that I'm looking for. at the moment, it's really hard to tell what the market's going to do. Obviously, we've got FOMC today, then NFP on Friday. Next week, we'll have a better idea of what's actually going on. If you're just trend following, then we're looking for a continuation to the downside in these US indices. If you look at gold, you can see this is the type of trade where we would have been long previously, but now we're looking for some sort of rejection of this 200-period moving average, keeping with the trend, get back above the 9-period moving average, and then moving up. We've come out of this balance area. We're just waiting to see now if any of these swing highs are going to act as support as they were resistance previously. The 200-period moving average is obviously dynamic support as well at the moment. If we get through it, and this, the sort of trend is definitely sort of making lower lows, lower highs, then we'll be looking to sort of come even lower, take out some of these double bottoms on the daily chart, maybe even come back down to the sort of bottom of the range from what is essentially the trading range from August 2020 down to March 2021. Brent, we are seeing this make a triangle. So you've got 1, 2, 3. So 3 touches to the downside. Even if you just take those 3 touches, 1, 2, 3. If we get back above the high from 18th of April, and we're looking for a continuation to the upside, definitely to take out the swing high here. If we get a break below, take out the low from the 25th of April, then we're looking for the liquidity below these 2 levels to be taken, and for this particular asset to come down to the 200-period moving average. Now, I do actually favor a move to the downside. When we came into this triangle, if you like, this compression, we had a move to the downside. So I think we're going to get a drop, base drop. Dollar versus the yen in an uptrend, just looking for a breakout to the upside. Obviously, we want to see dollar strength possibly come from carry trade, where we've got the Fed looking to raise rates quite dramatically, and the Japanese Bank of Japan not looking to raise monetary policy in any sort of hawkish way at all. So looking for the dollar versus the yen to carry on going higher. If you go to a monthly chart, you can see that there are a lot of candles to the left that we can target, the biggest being this swing high from 2002 and around 135 level. However, nothing should go up exponentially like this without a pullback. It's always a bit worrying trying to get in long when we're sort of seeing just these meteoric rises. It's always better to find a pullback before going long. So you might have to come down to a smaller time frame, look to the left, maybe on the 4-hourly, got the swing high here, acted as resistance, obviously back in 19th of April, acting as support, 29th of April. Now we're just looking to see if we can get a continuation to the upside. That will come possibly after the FOMC rate hike announcement. So I'll be looking for a breakout trade there. Obviously mindful that we need to get above the 131.28 and just make sure, go to a weekly and go back to 2002. So currently price actions at 130. You can see we're just in here. There's sort of this low to this high could be potential resistance, but there's not a lot else that hasn't been tested before. Like if you look at this balance area here between the 20th of January and 24th of February, these prices have pushed into that already. So they've taken any orders that were left from the lows of 24th of February. So currently, if we can get through to the 132.6, I think we take out the swing high. If we sort of stall between, if I just put a line actually, if we stall from the high here, put that as red, to the low here, make that green. And if I just go back to current trading. So if we see a rejection of this, and I mean, we want to see some sort of pattern which looks like a rejection. So that would be maybe a push in, pull down, break of the previous market structure, back up to a level, and then continuation down. I mean, that's the kind of thing we'll be looking for. It could be on a sort of smaller time frame, obviously. So if we go to here, if we were to now break this low from the 29th of April, so we had push up into that zone I just mentioned, market structure low. Now I'll be looking for a break down to that and then a continuation like this. So that's what I'm looking for in the dollar yen. If we don't get a push up to the, the 132.5 towards the 135, if we do get a reversal based on whatever the Fed say, then that's what I'll be looking for. All right, that's kind of like the midweek update. Good luck today. My advice would be to wait, don't trade the news. If we do get a sort of a news candle, if I just draw it out, if we get a big spike up on the news, you've got to remember people put their stops underneath the bottom of that candle. So if we were to get a reversal, so maybe the price action carries on for a little while in line with the news candle, but then if you start to see prices come down, don't just sort of fade this move. You can wait until the stops get taken here, and then maybe look for a retracement back after that. So that would be my sort of advice today. If you see a big range candle occur on the back of the news, wait for a break of where the stops would be put, and then see if that acts as resistance or support, depending on which way it's going, and then take a trade from there. All right, good luck today, and I'll speak to you again tomorrow.